What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw a bounce across the board as we continue to see a very volatile and whipsawing market. Where are we going from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up 1.61% and we did close back above that double top neckline, which is just above 445. You can also see the price action is closing back above the 20 simple moving average, even though the 20 simple moving average is still negatively sloping. You can also see we did gap up and that gap doesn't fill until SPY comes back down to 441.6. So you will want to watch the potential that we do go down to fill that gap. So you can clearly see this is still a very volatile market and there's still plenty of whipsaws in both directions. So the one thing I want you to pay attention to is following the trend. You can very clearly see this is still a downtrend until we get that bullish breakout. And right now the bullish breakout is going to be when SPY gets back over this 50 EMA, and the 50 EMA is currently at 454. Once SPY gets back over the 50 EMA, the bulls will be looking like they're in a lot better position, but the confirmation of the bullish breakout isn't until SPY can get back over 457. So everything down below the 50 EMA is still going to be very volatile and it's still going to be a very choppy whipsaw. And you can see today we did get back over the 200 simple moving average. So from here we could continue to see a volatile whipsaw, especially if we go down to close that gap and close back down below the 200 simple moving average yet again. So make sure if you're trading this choppy range, you have very quick entries and exits and you know exactly where you're getting in and getting out, even if that means you have to sell for a loss. To the downside, you want to look for support right around 444 and 441. And if we break down below 441, you're looking for a retest of this low at 439. Below 439, we're coming down to the double top price target at 433. And below that, we're coming back down the retest to the low at 428. Below 428, things are getting a lot more out of control to the downside, and we could see the stock market going into a bear market. Now to the bullish direction, you need to see SPY breaking out above resistance at 450 and then breaking back above 454. Above 454, the bulls are taking over control with confirmation above 457, and then we could start to see the bulls start to trend from there. But right now, this is clearly a downtrend, as you can tell by the lower highs and lower lows, especially if we do come down and take out this low at 428. So there's still going to be plenty of volatility until we can get a bullish breakout, and respect the fact that we are still in a downtrend until we're not. Jumping over to the NASDAQ 100 triple Qs, you could see we were up 2.49% today, closing just above the negatively sloping 20 simple moving average, but you can clearly see that we still have a lot of bearish momentum in the moving averages, and most of the moving averages are still stacked to the bear side. The full bear trend will be when the 13 EMA crosses back below the 20 simple moving average, and you could very clearly see the 50 EMA and the 20 simple moving average still have a negative slope. So we did gap up and close near the high of the day, but that gap doesn't fill until the triple Qs get back down to 351. And if we do go down and close that gap and close at that level, we more than likely will develop a bear trend, which means the triple Qs could come back down to retest the lows at 346, 340, or 334. Remember, if we start breaking down below 340, we're more than likely going to see the triple Qs entering a bear market. So you will want to watch that as a very critical support level. Now to the bullish direction, the bulls need to get a breakout back above 361 and get back over the 200 simple moving average at 367, and then form a new daily high by closing back above the 50 EMA and closing above 370. So you can clearly see the bulls have a ton of resistance levels they need to break out to get the confirmation of the bullish breakout. So the bears are still in full control and this is still a downtrend until it's not. Wait for that bullish confirmation of the breakout levels at 361, 367, and 370. You can see the triple Qs are stuck in this consolidation wedge, and that's why it's been such a whipsawing and choppy market. You're going to see the triple Qs enter a much smoother bear trend if it can break down below 340, and a much smoother bull trend if it can break out above about 370. So wait for that confirmation of the breakout and understand everything in between is just a trading range, and it is going to be very volatile. On the Dow Jones, we were up 1.25% today, and we see the Dow Jones getting rejected at the 200 simple moving average with the price action failing to close above that level. The price action did gap up and close near the high of the day, and that gap fills when the Dow Jones comes back down to about 347.6. Price action did close above the 20 simple moving average, but we still have a negative slope and we still have a lot of downward momentum. We need to see the Dow Jones staying above this support level at 347 and 345, because if we break down below 345, we're more than likely coming down to retest the lows at 340 and 338. Remember, if we start closing below 340 on the weekly chart, that will look like a double top, and that will put a lot more downward pressure in the Dow Jones. Your bullish breakouts are back above the 200 simple moving average at 351, and then getting back above the 50 EMA, which is sitting right around 353. Back above the resistance trendline will require a close back above 356, and we still do have that gap above to fill at 360. So you can see the Dow Jones has a gap below and a gap above, so there's no telling which gap will fill first, so follow the price action. On a breakdown below about 349, we're more than likely going to fill the gap at 347. And on a breakout above about 353 to 354, we're going to be more likely to come up here to retest resistance and possibly get that breakout to close the gap at 360. So follow the price action, because this is still going to be a very choppy market. And you can see the Dow Jones is stuck in a broadening wedge of volatility, so expect there to be plenty more volatility until we see a decisive breakout either above 356 or back down below about 344. In the Russell 2000, we were up 2.68% today, and we started to see the Russell 2000 running into the close, coming back up to that resistance level near 206, but failing to close above that level. You could see so far in the small caps, we are forming higher highs and higher lows. And the next bullish breakout will be back above 207 and then closing back above the 50 EMA, which is just below 210. The Russell 2000 will then need to close back above 212, and then it'll be looking a lot more bullish on a break above 215, and we could run back up to the 200 simple moving average, which is currently sitting at 221. To the downside, you're looking for support right around 200 and 197. And if we break down below 197, we will form another lower low, which means we're coming back down to 191. Below 191, we're likely heading to 170, with support on the way there at 183. On the Arkk ETF, we were up 5.45% today, and we see Arkk is starting to look a lot more bullish, but it hasn't yet had the bullish breakout, with the price action closing above 77. Above 77, we'll still need to get back over that 50 EMA, which is currently sitting just below 84. So your bullish breakouts on Arkk will be back above 77 and then back above 84. To the downside, look for support at 71, 69, 64, and 60. In the VIX, we were down 9.32% today, with the VIX closing right on top of the 20 simple moving average, and we're only a day away from possibly getting a full bull trend. So be very cautious when you see the VIX trading above 24, because it means we're still in a very volatile market, and there's still going to be plenty of whipsaws and risks to the downside. Wait until the VIX can get back down below about 23, and then if you want to be even more safe, wait till the VIX closes down below 20, because that will be a lot more bullish and the market will get a lot less volatile. As long as the VIX is trading at these elevated levels, be very cautious and expect to see plenty of volatility. On Bitcoin, we're currently up about 3.89%, with Bitcoin trading back above the 50 EMA, which is a bullish development. Remember, the longer Bitcoin can stay above 43,000, the more likely it has time to develop a bullish trend, and you can now see all of these moving averages are positively sloping and the bulls are starting to take over control. The next bullish breakout on Bitcoin will be back above 46,000 and then closing back above 51,000. To the downside, the bulls need to hold support at 43,000 and the 20 simple moving average is now just below 41,000. On NVDA stock, we had a very bullish day, going up 9.18% today and closing back above the 50 EMA. The next bullish breakout will be a close back above 266, and then we'll need to see price action breaking back above about 271.5, and then we could see NVIDIA stock going back into a bull market. We're going up on increasing volume, but earnings is right around the corner, and as I always tell you, anything can happen during earnings season. We still do have a gap down here at 228, so if earnings goes against this stock, we could see a quick chip down there to close that gap. So wait to get bullish until you get the confirmation after earnings back above 266 and then back above 271. And then we could start to run up to some of these other resistance levels in the 290s and low 300s. To the downside, look for support at 261, 253, and 243. On Tesla stock, we were up 5.33% today, and we did see Tesla breaking back above that resistance level at $900 and closing back above the 20 simple moving average. We still need bullish confirmation to get back above about 937 and then getting back over the 50 EMA, which is currently just below 966. Above 966, Tesla will be looking a lot more bullish, with confirmation breaking back above that support level right around $1,000. To the downside, look for support levels at 900, 860, and 827. And if we see Tesla breaking below 827, expect to see it going into a prolonged bear market. On Apple stock, we were up 2.32% today, gapping up and closing near the high of the day and getting a bullish breakout back above 172. From here, we can regain the bull trend and go back up to test the breakout at 176. Above 176, look for a retest of the previous all-time high at 182. And above 182, you're looking for a brand new all-time high price target at 188. To the downside, you have support at 172, 171, and right around this gap close area of support right around 168 to 169. Remember, if at any point Apple starts closing below 168, we're more than likely losing the bull trend and coming back down to 162 or 157. On the financial sector, we were up 1.36% today, and we still have bullish price action and a bullish trend. The industrials were up 1.51% today, getting rejected at the 20 simple moving average, and we really can't get bullish until we see industrials getting back over that 50 EMA. The healthcare sector was up 1.12% today, but still closing below all the moving averages, so you still need to be cautious of more downside. The energy sector was down 1.05% today, retesting that 20 simple moving average as support and bouncing off of that level and still holding on to the bull trend. So jumping back over to the S&P 500, this is definitely still a very volatile market and it's still a downtrend until it's not. So you still need to be cautious of more downside until we get confirmation of the bullish breakouts. There's still going to be plenty of volatility until we see the VIX getting back down below 20. So make sure if you're trading this choppy market, you have a strict plan and you're sticking to it. Remember that volatility works in both directions, and when you have a very volatile whipsawing market, there's going to be bull traps and bear traps alike. So try not to get overly emotional, just make sure you have a strict plan and you're sticking to it, or wait for the confirmation of the bullish breakout and a confirmation that we're going back into another trending market. Right now, the trend is still lower until we get confirmation of that bullish breakout, so if you don't like trading a choppy market that's selling off, just be patient and wait for the confirmation of that breakout. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of the volatility in this market in a brand new trading year, now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.